Good day everyone, and a warm welcome to this short explanation video which I'm gonna do regarding how to trade an expansion. I'm going to illustrate how you can be able to benefit from trading an impulsive move, or to trade to anticipate how you can trade when market has been in a range. So what is an expansion? An expansion or an impulsive price move is when price moves quickly away from a level of equilibrium of the range. So basically what I'm saying is an expansion is when price is in a range, when you notice that there's been an impulsive move from a level which is 50% of the range. That is what an expansion is, and I'm going to show you how you can benefit from that. So what is the main importance? When price leaves a level impulsively, this shows a willingness on the part of institutional traders to reveal their intended moves. So what I'm saying is, it indicates to us what the institutional traders or the market makers are trying to do. How are they trying to trade the asset, and in which direction? So what then do we look out for after we have noticed an expansion? We're gonna need to look for the order block that the market maker or the institutional trader leave at or near the equilibrium price point. The equilibrium price point, guys, is the middle of the range. So I've got a good example here. We've got the Euro GBP chart. Now, as you have all noticed, price has been trading in a range from probably last week, Tuesday. Price is trading in a range, the gray shaded area that I've highlighted. So now I'm going to define the range so that we can be in a position to plot the equilibrium, and I'll be in a position to show you the impulsive move which happened prior to this strong bullish that we eventually saw on Euro Pound. So now I'm going to define the range, and to do that, let me just clear up the charts and then I'm gonna zoom in. Right, so now what I'm gonna do is I'm gonna highlight the bullish order block that was broken prior to the market ranging to the downside. So this is coming in at here. This was our bullish order block. Let me just make sure the line is straight. So this is our bullish order block which was broken here. You can see that price broke to the downside, right? And then it started ranging. So this was Tuesday, Wednesday, Thursday, Friday. Market was in a range, and then yesterday we saw a push to the upside, and then today, boom, an expansion. So this is the trade that I want to show you how you can be in a position to trade this type of moves. So now that I have highlighted the bullish order block which was broken, which is this guy here, the last down candle in this massive drop from a level of supply. So now that I've highlighted, I'm gonna highlight the lowest low in the range. So the lowest low is coming in at this candle here. Right, that's our lowest price point coming in at 814. So now I've highlighted the lowest point. Then I'm gonna grab I'm gonna copy this line here. I'm gonna highlight the high of last week, which is coming in here, right? So now we've got our range. So our range is basically, we're looking at this area. So that's the area that we are looking at. Okay, let me just make this precise. Now I'm on a daily chart. I'm going to jump straight to an H4 chart, because now I need to be more precise with my range. And to do that, when I'm on an H4 chart, I'm going to switch to a line chart. Now when I switch to a line chart, take note of the peaks, the highs and the lows. One is coming in here, one is here, you see, and then we've got one here. That's my clear range indication, because from the level that I marked, I was marking it including the wicks, but now the range that I need is the one that includes the body of the candles. So I'm gonna readjust my rectangle 2 to this high and this high, and I'm gonna grab my line 2. I'm gonna place it at this high. So this is last week's official closing high price, and then we've got these lows here, right? So that's the range. You see, that is the range that we are looking to trade. Once I've done that, I've been more precise now with the range. I'm going to switch back to my candlestick. Now you can see what that did. This low here is the opening of this week. You can all see that. Let me show you. There we go. That's the opening of this week, and this was our range from last week, disregarding the wicks. So now we need to define our equilibrium point, our mid-range point, price point. So to do that, I'm gonna grab my Fib 2. Now from this high to this low, right? More or less the same. So this is my equilibrium is coming in at 87140. Then I'm gonna grab my horizontal line 2, and I'm gonna put so that's 87140, 87140, right? That's my equilibrium point. Then I'm gonna get rid of the fibs because I don't need them. This is pure price action. I'm showing you pure price action, guys. Of course the fib I use it to determine my 50% level. So this is my 50% level. Now once you have done that, right, once you have done that, you need to be in a position to identify the impulsive move that leaves the equilibrium quickly. In this case, it came in at this candle here. You see this candle, the way it left the equilibrium point, it never looked back, right? That candle massively moved away from the equilibrium point. Now what you need to do now is to look for the order block that the market maker or the institutional trader leave at or near the equilibrium point. So in this candle, we've got an order block, a bullish order block, because market has already shown us that it's willing to move to the upside, right? There was a willingness on the part of the institutional trader to reveal their intended pricing model. In this case, they've revealed to us that they need to move to the upside. You see? Now this is happening in this current trading week, but we are basing it from last week's range. So now that you have identified the expansion candle, now we need to go to a lower time frame in order for us to identify an order block, a bullish order block in this candle here that would have allowed us to trade to the upside. I hope you understand that perfectly, guys. So I'm gonna go into a 1 hour chart. Let me just zoom out a bit. Now I'm on a 1 hour chart. Remember, our candle is okay. Let me go to H4 and highlight that candle so that it's easy for people to see. So now I'm gonna highlight this candle here. Right, I've highlighted it. Now I'm gonna give it a different color. You just make it salmon or something light so that it's in this salmon color coded rectangle that we are going to look for the order block. Now I'm gonna go to a hourly chart. Now let me just zoom out a bit. There. Can you see our order block? That's on the H1. This is before this whole move, but already the market maker had shown their intentions of moving to the upside. You see, they had already shown. So now this candle together with this guy, that's our bullish order block. Right, and for those who don't have MT5, you're gonna see much clearer now. There we go. Now on a 2 hour chart, see, Euro Pound 2 hour chart, you can see now our order block. Let me get rid of the so that you can see clearly. So this is our bullish order block. You see, our down candle where we are going to hunt for long trades, because already we've identified market wants to move to the upside. We've already seen that the institutional trader has already shown us that no, they are willing to move the market to the upside. You see, so this is something that you have to do with price, with the real market price. You see, of course this is now hindsight, but I thought I was really waiting for such an example so that I can show you guys how to trade the expansion. So now in this black candle here, this is our bullish order block, which would have gotten us an entry here. You see, at this candle here, that candle would have offered you entry to the upside. The moment this candle closed, almost 50% of our order block, this would have been your entry to go long. And you can all see what happened after that. Yes, market did dilly around for a while, but eventually, boom, it exploded. 130 pips. You see, so in this down candle here, if I go to a 30-minute time frame so that you see exactly what I mean. You see, so this is this down move here is our bullish order block. Then market traded away. When it came down, this would have been your entry to the upside with your stop loss way below last week's low. You can see market never looked back, though you were gonna have to hold the trade for a while before it eventually traded to the upside. So I hope this explanation makes it clear on how you can be able to hunt for trades in a ranging market, in a market which is consolidating. You see a market consolidating for 4 or 5 days. This is the setup that you need to be hunting. You see, define the range, define your equilibrium, look for an impulsive price move, whether it's to the upside or to the downside. Then from there you start hunting for the trades. So with this, I conclude this short tutorial, and I wish you guys good luck and happy trading. Thank you.